Good day, everyone. Welcome to another episode of Market Feels. I'm Belinda Chandra and I'm your host today. With me is Hilton and Zenzi. Welcome to the show, guys.
Thank you, Belinda.
Mashonaland Holdings recently released their year-end financial results. So Mashonaland Holdings is a property investment and development company. They highlighted that their revenue was up by 80% due to increased occupancy and property rental reviews. Hilton, what's your take on Mashonaland Holdings results?
I think starting from what you've highlighted, they said that the revenue was up 80%. However, in such an economy like Zimbabwe, where there's inflation, we mainly focus on the inflation adjusted. However, companies have a different way of calculating these inflation adjusted figures. So it would be safe maybe to look at the company's inflation rate. They recorded the national inflation to 90%. That's bringing their results to a negative. They have a net loss. This is quite one of the first companies to have a net loss for the year 2021, regarding to what we saw from other counters such as Simbisa, Insco. They're all in the positive. However, recording a loss, Mashonaland Holdings have an increase. They declared a dividend of about 3.003 cents, which is like a 1% dividend yield. We've seen this more times on the ZSC, where companies declare dividend, however, from recording a loss. Since Mashonaland is in the real estate business, it is quite counter to look at, although ZSE is talking about introducing real estate investment trust. So you would see that the current real estate exposure we have on the exchange fairly performing not so well, I would say, comparing to other counters on the exchange, with a to date, which is about -1. So Mashonaland is quite a good company from historical. Going forward, it's a company you would want to look at, because they have highlighted that they are doing proper developments in Rua. They have Marshview Gardens, and they're doing a hospital in Van Primington Park. So going over 2022 year end, we might anticipate an increase in revenues and also an increase in the net profit for the company. Yes.
Okay, Sense, what can you add?
I'm sure with what you said, you have mentioned many aspects of the business, and I see going forward, Marsh is going to have a very exciting times, and the rental yield, which you don't mention, that it has dropped, and I'm sure this coming year it's going to increase. And due to some of the factors, as he has highlighted, we're going to have REITs coming in this coming year. So with REITs coming in, there are going to be a lot of stuff that's going to happen, which is going to change the local regulations of council, where Marsh will be able to change some of the land use from commercial properties into residential. So that will actually cause the rental yield for the company to improve in the coming term. Also notably, Marsh is currently valued at around 22 US on the using a parallel market rate. For me, it looks very much undervalued in terms of you looking at the current circumstances on the books, where the bosses are actually overvalued. So it means that the company going forward, the share price is going to increase. As Hilton has highlighted, the year to date is still 1%, and it is a year-on-year gain of around 199%. So I think in the coming quarter, in the coming year, Marsh is actually a very good counter to buy, as you also get exposure in real estate, and it's usually not very hard to go wrong with the real estate asset classes, since they are very defensive in nature. We still have people wanting to utilize their services which they offer. And notably also in the coming quarter as well, the building that they had by the one by Kuna Samora and Julius Nyerere, which they wanted to convert into a hotel. I'm sure with the coronavirus cases dropping and it being changed from pandemic to endemic, it means now that the severity of the disease is going to be decreased, which is actually going to in turn cause tourism. So in that space, I'm sure they're actually going to have higher utilization of that property into more profitable. So I think the future is actually very good, and Masimba is a very good counter to buy in the meantime. Is, as I've alluded to, the facts that I've stated before, that it looks good. It's a good buy to buy.
Okay. Thank you, Zenzi. So the market is currently on an upward trajectory. Zenzi, what's your take on the current bull run?
My take on the current bull run, we've seen the market cap improving very significantly, especially in the month of April. The first quarter, it had a year-to-date gain in nominal terms of around 55. Now, from now now today, it's now having year-to-date of around 88%, which which is about 33% change in between the last quarter and in the beginning of April. So I think the main driver of it is because of lack of depth in the market. We are not having sellers. As you have seen, the exchange rate is actually run away in the parallel market rate. So what's actually causing it is lack of shares to buy on the exchange, and the buyers are dominating activity on the bourse, which is actually caused the market cap to improve from around 1.2 trillion at the start of the year. Now it's now at around 2.3 trillion. Uh, the fact that I valued the main causes of it, and people still use the ZAC as a way of to preserve value on the exchange.
All right, thank you. Hilton, what can you add?
Just to add on, it's quite interesting to see that in the second quarter of the year, the market is going up. On Tuesday, we saw an 8% OSHI rise. Mainly, when we see such figures, it's usually aided by small cap and medium cap. But however, as for the Tuesday, we saw 9%, about 9.4 increase in the blue chips. This, as Zenz was highlighting, it represents that there's a lack of sellers on the market. So you see everyone trying to buy it and preserve their currency. They go into these counters, your Deltas, Simbisa, Econet, and we have seen such counters gaining about 20%, 80%, 20% each day, with Simbisa now way over 200% with the year to date, and Axia also leading on the top prices year to date. So we anticipate that going forward, you would see these the blue chip counters gaining day by day, and as people try to, as investors try to preserve their currency,
Also,
preserve value on the currencies.
Also, adding on what you didn't say, you should also understand that the stock market is not a zero sum game where we would say that one's gain is one's loss. So with all the circumstances which we alluded to, it's actually due to the buyers, which in the sessions have been characterized by very thinly traded shares. The turnover has actually dropped to an average of around 200 million per session from 350 to 400 session. So this is actually some of the circumstances which is causing the bull run to be very much significant. And is also the stock market is also a leading indicator of what the actual parallel market rate is supposed to be. So the moment that you realize that the rate is increasing on the parallel market rate, then you know that the valuation on the stock exchange also they also increase, or it's the stock market valuation that starts to jump, which will in turn cause the parallel market rate to increase at a very significant rate.
Thank you. Don't forget to subscribe, like, and share.